All right. Good afternoon, everyone. This is Daniel from Tradecraft 360, and I thought I would detail a relatively simple trade that I put on earlier in the week. And this was on the 13th of December, and this is a short Tesla 495 call into next week Friday expiration. So somewhat of a simpler trade, just taking advantage of elevated Tesla call premium. So, everyone who's been following Tesla knows that it's had a monstrous run. I think it's actually doubled almost in the last 6 to 8 weeks. So, and a lot of traders were commenting that, the underlying looked bullish, that was definitely in play. Doesn't take a genius to sort of figure that one out. And I certainly, along with many others, was long Tesla. I kind of exited a few of those positions over the last 2 weeks. So I don't have a substantial exposure to Tesla right now, although I might elect to buy in should there be a pullback. So basically, this trade is 20 contracts at the 495 call with end of week expiration. And I sold those contracts for $1.49, 20 contracts. So you can imagine that's close to 3,000 US in premium. And obviously that's the notional value of that trade is a little less than $1 million, somewhere around there. So should Tesla obviously breach that strike or tag it, become at the money or in the money, then obviously then you would be going short 2,000 shares at 495, and anything above that would expose you to unlimited loss. That said, I tend to keep a very narrow time frame, short time frame on these types of trades, and I wouldn't want to go out 6 to 8 weeks. So as I wrote in the analysis section, such trades I tend to avoid simply because the market can surprise you in either direction. And certainly Tesla, if you had sold, let's say, the 400 call, let's say 2 months ago with end of January expiration, probably that's what you would have had to have done to collect any significant amount of premium. Now you're in deep shit. All right, so what do you do at that point? So let's say, for instance, your strike was 400. There's 4 weeks left on that trade. Do you buy in? Do you hedge off your risk? Then you're subject to a reversal in the underlying. Let's say Tesla has a liquidation break lower. Maybe there's a wider correction in the market. Then, since you had to buy in, you're subject to that reversal, and that would then put you in an unfavorable situation and might take many weeks or months to finally recover, to see Tesla, regain those new highs. Or, Tesla continues its underlying strength, and maybe you buy in before, it hits that strike, but it puts you in a difficult situation either way. So you've lost control, all right, is basically what I'm trying to say. So if you were to have to buy into Tesla 4 weeks before, expiration of that option, well, you have 4 weeks of price action that you can't account for, can't control for. And, if it were to reverse, that can happen, or it could keep going up and you simply deliver the shares at the strike that you own and you just carry on your way. Except there's that time period where anything can happen. So I tend not to like to do that or put myself in those types of situations because I like to be more hands-on. I like to take each day as it comes in the market and trade around those positions. And I don't like to be subject to weeks where there's nothing I can really effectively do except close out the position for a substantial loss. And as I've said before, I don't like getting stopped out. I don't like taking losses. I will trade around positions, get back to neutral, and because I have a narrower time frame, I have a few ways of sort of getting back to a net credit on a position or making the trade a wash. I know a lot of other more active traders will just prefer to get stopped out. I don't do a lot of intraday trading, like buying and selling, 5 or 6 times the same security in a single day. I tend to take more of a position that lasts maybe sometimes a day, oftentimes several days, and then usually within a week I'll wrap things up, and then sometimes I'll extend things out several weeks. But the short-term trades are usually within the week, so typically I don't go much beyond. If I'm doing like a very, very short type of trade, or I should say like a diagonal or a calendar, I'll go out 6 to 8 weeks and then start selling the weeklies against that position. That gives me enough time to cover the cost of the initial call or put that I put on, so to speak. So this type of trade, the reason I went out 1 week is that that's all I'm comfortable going out. And let's say, for instance, Tesla starts to accelerate to the upside. It's already fairly extended away from its moving averages, but let's just say, for instance, that it starts to go bananas and 495 gets tagged. I imagine that it wouldn't happen in one day. It could, but probably maybe Tuesday, Wednesday, Thursday, around that time period would be more realistic in terms of accelerating to 495. And then there's only a day or two left on the trade, and then I can make a decision about how I want to move forward from there. Do I buy a protective call? Do I sell it in the money put? And go from there. So I wouldn't want to go out 3 weeks and then have it breach that strike on week 1. Then there's 2 weeks that I can't account for. I'd rather there be only like 2 or 3 days. So it would take at least a day or two, I think, for Tesla to go to 495 from 430. And that would be a impressive move, not impossible move, but an impressive move. And much more likely than Tesla would be subject to a break lower, right? So that would be pure momentum to the upside, and then it wouldn't take much for traders to sort of like App 11, right? Like that kind of accelerated move to the upside. Then all of a sudden, in the after hours, people start to take their profits, and then all of a sudden that is the catalyst for other momentum traders to exit stage left, and then you have that break lower, right? So it's just an auction. Auctions go in both directions. And, Shadow Trader does an excellent job of sort of detailing how auctions function and that two-way price action. So I would imagine that there would be very thin structure on Tesla's market profile should it accelerate to 495. Again, I don't use, I keep my charting very simple. I don't really use much technical analysis in my day-to-day. I use other sites to sort of give me that kind of like, for instance, market profile. I'll use Shadow Trader and that service to sort of guide if I am interested in market profile or I want to see the market profile. I use those types of services. And then different traders will provide technicals. I'm not really that type of trader. I am aware of it. I don't use it my day to day. I structure my own trades, and there's lots of different ways of trading the market. There's no one right way. The right way is making money and being consistent. So in this particular case, there's elevated call premium, knowing that Tesla is extended from its moving averages, that such a move to 495 would be impressive, would then really extend Tesla away from its moving averages, and then it would be that much more likely Tesla would be subject to a break lower. So we'll see what happens. I am comfortable with the amount of premium. It won't take long. If there's even 1 or 2 or 3 days, probably even just 2 days of sideways action on Tesla, watch this option decay. So it's trading for I think $1.75 at this point. Watch it be worth 40 cents, 50 cents. So it won't take much. All it would take is just 1 or 2 days of sideways to down action on Tesla. And this option will be substantially reduced in price. So yeah, that's about it. So I know that's a relatively simple trade, but there is the analysis that goes into it. Is what if things don't go your way? There's the initial trade setup, as in the reasons for it. The reasons are pretty simple. Call premium in relation to where the underlying is trading is favorable as far as risk reward is concerned. And I am somewhat familiar with Tesla. I've traded in the past, and I have ways of mitigating risk. And I chose my time frame wisely, I think. I didn't want to go any further than a week, and yeah, we'll see how this sort of plays out. I'll give an update later on and go from there. And yeah, hope everyone's having a great weekend, and looking forward to the trading day on Monday. All right, everyone, take care. Bye-bye.